So now we can get started. I did share the link into the free channel trading community. So right now we just have to start and do, first of all we want to do market breakdown. So currently there's no one in here, so as we move forward we will just see how many people then join. But then for those who are not here, they will then right. Okay, so for now it's just me and you. As we move on, we'll just see how many people join, but they will just find me a step ahead with the presentation, not even a presentation, just the market breakdown. So I'm not gonna be waiting for people to join, so I'm just gonna move on from here. Right, so first of all, as I did mention, I wanted to then come and break down the charts on gold to explain especially the whole bullish movement that I did actually announce in the group. Where is it? Let me just go back, and it was on the 8th, né? Yeah, while it's still loading those okay, it's still loading the charts, but let's just move on to that. So first of all, okay, I want us to then look at where the first buy occurred, right? Where the first buy occurred, which was around here. So keep in mind that the way I trade, I have about 3 trading models that I follow, but there is mainly 2 that I use each and every day. So the third one is I only use it from time to time, right? But then the first the first 2 ones, they are very most important. So now with this first sell from here uh, on gold, I think it was from a daily time frame. So let me start with the daily time frame. If I was not mistaken, it was from a daily time frame. Just gonna go to a daily time frame so that I can see it properly from there. Okay, sorry about that. Oh well, nope, it's not. Okay, let's go to 4 hours. I just want to go to 4 hours so that I can be able to see which time frame it was at first. Why was I focusing on cells at first from there? That's why I need the from the 8th. Oh, this thing is taking time to load. Let's try and go back. Thursday. Let's try and just check where it was before then, so that I can be able to remember why in the first place were we focusing on sales. But then for me to start looking for buying opportunities, it was because of the second model, which was equal lows, right? So 15 minutes time frame. Well, it takes time to load those charts. I don't know why does it take this time to load, and I'm sorry about that, because okay, I'm using manual, meaning I'm using my hands to scroll, so that's why it might take some time to get to where I want. so I have to pinch the screen. Okay, unfortunately, since well, I can't remember why did we sell at first from here, but I'm just gonna go to that specific day since well I have a marker right there, which is gonna make it easier. So at first, okay, let's see, this is 15 minutes time frame. So at first, I think I definitely, maybe the first sales was because of the daily bias of that particular day. Let's check. This was the first daily range. I was looking at the first daily range, which comes from the first 15 minutes candlestick that occurs in the day. So it gives us the daily range, and then from there, let's check 215. Where's 215? I just want to check 215. This was 215, and then 330. Yeah, it was because of the daily bias. So the daily bias on this specific day when the sales started occurring, it was because of the daily bias. So the daily bias of that particular day, which was on the 3rd of January, it was a sell on that day. So that's why maybe the current sales from here, on the, I think it shows under daily time frame, there were sales that we were looking on because of the daily bias on the 3rd was sales. So it means that the first thing that I was looking at was mainly the use of just looking for selling opportunities. Basically, it means that on that day I was literally just more focused on selling opportunities, which I then came about highlighting those selling opportunities, right? And then we can go to this specific day. On this specific day, then if I'm not mistaken, here I was using the, because I see there's no much of highlights there, it means I was using the Fibonacci trading model, whereas in here then the cells were from, I used this first. Okay, I was highlighting from this point, this high right there, and then our lowest price was this one. So you can see that right there price came back exactly for that 61.8 key level, and because it's from a 61.8 key level, mainly this will help you for sure. Every time on a price, if you are expecting price to actually retrace, sorry about that, if you are expecting price to always retrace from a 61.8 key level, as soon as it touches that 61.8 level, it doesn't necessarily say sell. No, you sell after you get what, after you get your engulfing candlestick. But because on that particular day, as soon as price started giving me this candle, I realized that we're definitely in for selling opportunities. That's when I definitely went in on the sales at first. As you can see, they definitely hit the, it will always hit what, it will always hit the first main target. So the first main target will always be the negative 61.8 extension. This will always be your TP if you're expecting price to always retrace from what, from to retrace from the 61.8 level, then the first TP will always be this one. So meaning that the sell on this one, on this particular day, if I do remember quite well, this were the targets that I was actually looking forward for. But then I remember I did exit the trade on gold, because on that specific day we were looking at GU. We were looking at GU, as you can see right there, it was around London session, and on that specific day, which was on the 6th of January, we were looking at GU during London session. So I exited and I never came back to it. So I only came back later on around the what time it was. Yeah, it was during the New York session when I came back to highlight that okay, now the buying opportunities on gold have already started, right? Because it had already hit the target, the main target that I was actually looking forward for, which was my main focus at that time. But now if we then look at this specific key area here that I did highlight right here, this one, so this one came in as a, it was a daily time frame retest in this case. So this was a daily time frame retest. So according to me, that most definitely this was not a solid, it was not a solid rejection to the upside, which I think in most of the times it's harder for me to actually identify trade entries on particular movements like that. So but then if we then look at prices around, let me check, I think it has to be somewhere around 3 minutes or something. In under 3 minutes there was I mean equal lows within this price. So hence after it actually rejected from this price under 3 minutes, the buying opportunities most definitely started around under 3 minutes. They started somewhere around here under 3 minutes, if I'm not mistaken. If we go to 3 minutes, they started around there because there was a strong push to the upside. So that's when the buys were already starting, and from the fact that the buys already were actually they were English. If I would say, then the buys on that particular day after New York session, then I would then say let's look at the daily bias on this particular day, right? Let's take a look at the daily bias on this particular day. Okay, this was the 6. Yep, we're still on the 60. So the daily bias on this particular day, it was 215. Let's check 215. There we have 215, 330, 330, definitely. So on this day, the daily bias was let me check. No, the daily bias was bearish. Yeah, the daily bias was bearish for this one. Then it means, yeah, here, but the main reason was it was from a daily time frame perspective. There was a daily candle retest. If we go to daily time frame, okay, let's do this first. Daily time frame, let's just try and check the daily time frame a little bit, so that I can definitely just get into analyzing for today's come on, just somewhere around here. Yep, it was definitely from somewhere around here. So if you take a look at somewhere around here, most definitely price was showing that we needed to be looking at buying opportunities to the upside, since all this came in as a strong push, as a strong pullback to the upside. So we're still looking forward to seeing gold actually pushing to the upside. So that's what I was actually still looking at on gold, right? So most definitely, hence I'm saying it was sort of like a daily retest, a push to the upside. So let's check 4 hours for extra confirmation, just to check what was going on in the 4 hours. No, 4 hours didn't give me anything. Surely it was definitely the daily time frame, right? So on the daily time frame, was definitely, that's what we were looking at, a rejection to the upside. So it did okay, but then I think on this specific day we did not really focus more on gold. I then came in, it was on this specific day that when I actually started now giving the continuation price to say what were the prices that we're looking for on gold, the key areas to look at, right? So this was on the 7th of January, right? On the 7th of January, no, it was on the 8th of Jan, right? So if we then look at the 8th of January, so let's just take a look at what was happening on the 8th of January, right? So mind you, the first thing that I did was I already saw that we are already in a strong push to the upside, right? So as much as the identification upon price was that price has to actually push, right? So it means that daily, all I was looking for was daily, was looking at days where the daily bias was bullish, right? So let's want us to go to like 15 minutes under the 8th of January, so that we can take a look at what was going on the 8th of Jan. 8th of January. There, so this was sort of when I actually started giving out this price to say that the chances of actually gold buying even more on the 8th was because we already saw that gold had to actually buy more, right? But then now all we needed was to check the daily bias. So we're going to check the daily bias on this 8th of Jan, so that we can definitely see what was going on. So on the 8th of January, as I said, the candlestick that identifies the daily bias is, you look at the first 15 minutes candlestick of the day, So basically it means you need to identify, it's you're identifying the market open, the first candlestick within 12 o'clock and 15. So meaning that during the first 15 minutes of market, after market has actually opened, that candle will identify the daily range. So from that daily range, you're going to be looking at 215 when Asian session opens, right? So because gold is more active during Asian sessions, so you're gonna be looking at the daily what's this thing, the candle on the 215. So you look at the daily candle on the 215, and then where the daily candle, where the candlestick closes, you're gonna mark up its highest price, right? I'll just use this current price right here. You're going to mark up the highest price of that 215 candlestick. Where does it close, right? Where does it no, yeah, it's where does it close? It closes around here, right? This is where it closes. Then what you're gonna be looking at is now the 3:30. So 3:30, then you look at the you look at, how do I put this? During 3:30, then you look at where does the candlestick, or rather not even where does the candlestick, when it hits the 3:30 during Asian session, where does price open? Does it open above or below, right? So in this case, we're going to be looking at 3:30. 3:30 was around here, so we see that price did most definitely open below, above what's this thing, below, right? In this case, unfortunately, according to this daily bias right here, the daily bias did signify that we are looking at like the daily bias was bearish. So it means that it was quite a heavy day for us to be actually looking at more buying opportunities, but because of the structure was allowing us to focus more on buys, yet the daily bias was bearish. If we then take a look at what was going on during Asian session and New York session, you will see that they were confirming what was supposed to happen as a daily bias. So if you look at from Asian session when price opens until uh, closely almost the Asian session, it was almost like ranging, but you sort of see the selling opportunities that came about. And then if we then go and look at the New York, which is around this times, you can see that around this times, that's where we actually had a sort of like a push. So for sure, under smaller time frames, definitely there was a short sell in there. So you can see how much of the selling opportunities within that particular day were too little, though it shows that even though the daily bias was bullish, the daily bias was bearish, so it needed to confirm at least stay in motion for the Asian session, and also just that bit of part of that New York session, right? So but then because of the daily the long-term part, which I did say, now the main focuses that we were looking at was pushes to the upside, right? Then according to the model, let's see, where would you have entered, because I don't remember actually sending out a setup for entry. This one, it was more on the swing side of everything, so I don't think there was particularly a way one could have went in on sell on buys on this one. Most definitely, I don't think there was a proper confirmation as to why would you have entered right there. But most definitely, what's important is identifying that the main reason why we're looking at more buying opportunities is because of what was happening right here. As I said, because we had equal lows around these areas and price swept those equal lows, our first TP, according to price, it was not even around these areas. Our first TPs from this first price, from here, our first TP was already potential. The potential markup prices that were already there was this price. As I did mention, it was 26.9140 from the group. I did actually mention that part, that the target there was definitely supposed to be, the first target was supposed to be 20. Let's check where it was. I don't know where it is, but it's somewhere within the group chat above there. Most definitely, that's where I did actually highlight the parts of like the most potential key zones that we needed to look at. But now let's go to, okay, let's just expand just to check why 2691.40 was a potential. So I'm just gonna remove the ones that we already used because they're no longer important. So this was definitely the reason. So the reason why I marked 2691 was because from that 2169 2691.40 there was a resting equal highs. So where there's actually resting equal highs, the chances are that price will most definitely be your TP. So price will always move from equal lows, right? Price will always move from equal lows. After breaking those equal lows, it will always move to where there's potential what? It will always move to where there's potential equal highs. So that's what you must already know. Always know that price will always move to where there's potential equal highs. Where reason being that as soon as it actually reaches those key areas, as soon as it reaches those equal highs, same thing applies. We expect either a rejection. That's why I mark those key areas as potential rejection prices. But then if price fails to reject, then chances are that price will continue pushing as we did. As I did mention, you can see, let's just go to the charts. uh, let's just check what happened when it reached that 20. Let's look at it. Look at what happened after it reached that 2691. There was quite a huge drop to the downside. Why? Because 2691 on its own was a rejection price. So for me, I already know that if price then reaches prices like that or key areas such as like this, always expect something like that. But it's not that it will always sell. The thing is that you need to know when will it sell, right? So as you can definitely see right here, most definitely it did sell, and then you can see that if it sells, because it's also another key area, it's equal highs, there has to be equal price that will hold price from pushing even further. So it means that the targets for equal highs is always equal lows. From equal highs it came back down to equal lows. From equal lows, as it pushes to the upside, our most recent potential TP that we were looking at, it was not this was not there. As you can see from the chart, from the group, the only two prices that I mentioned was the only two prices that I did mention as potential TPs were only two. I did not mention a lot. I only mentioned 26. Yep, you can see right there. This was on the day that I mentioned. So the only TPs that I was focusing on was 2691.40, and the last TP was 2789.30. So you can see that our last price as TP was it's not even this price, as I did mention, it's this price. This is the last TP, and you can definitely tell that price after that it just kept on pushing to the upside. And as soon as it kept on pushing to the upside, this was actually a potential re-entry for scaling in if possible, because of a second trading model, which is the trend trading. There's a way that we approach. These were two entries that we identified for myself. Obviously in the group, I don't think I really did much. I didn't do much in terms of like sharing this continuation right here, but our first entry was around here, the second one was around here, and obviously main target according to the trend trading was definitely around this key area. And you can see that each and every model that I'm using, each and every TP that I highlight has its own remarkable reactions. As you can see, this is according to trend trading. This is the TP. As soon as it hits TP, a rejection is always occurring. So in this case, this came in as a retracement. After the retracement, price kept on pushing to the upside, and the only last target, or rather not even the last target, the last prices that we're looking at is to come back and complete its uh, 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 market price. So it just needs to do that by covering up the last remaining points, right? It just needs to cover up the last remaining points to cover up the whole 13. So it means that according to this whole setup, we did actually predict exactly a whole 13,819 points buy on gold. So this was a successful 18, almost 13,819 points push to the upside. Imagine if you entered with a 0.01 or 0.010, it's a good it's a good one. So this was a good successful swing trade according to me. And obviously, as I did mention, there was also GU, but since well I'm not really interested in looking at GU right now. Where is it? Sorry about that. I'm not interested in looking at GU swings. But also GU as well did some you see right here I was definitely wrong. Had some wrong trades which I lost the funded challenge because of this trade. I lost the funded challenge because of this trade. But if we then look at the overall directions that I had on GU, you can see that the swings from here to here, they were perfectly executed, and even these sells from here, they were perfectly executed. If I do remember, I did share this sell, this buy up until those areas, and then also the sell up until these areas was also shared. But today I'm more focused on just looking at gold, so now I can definitely just get into analyzing gold and just looking for potential yeah, sort of like potential, I don't know how to put it, but yeah, currently I'm just going to be looking at potential. I just want to stop this one first. Let me do this. Let me stop this record.